Good morning. I'm Richard Calhoun, real estate broker with Creekside Realty. 40 years of working with buyers and sellers here in Silicon Valley. We're here to talk about the real estate market. Week number 10. We'll come back to this URL slide in a few minutes. This is the first data slide. It shows the available inventory down here in the blue. That's total inventory, what's available on the market today, last night at midnight, without an underlying contract with another buyer. So if it's contingent, backup offers requested, I don't count that as inventory because it's really not available until that first buyer backs out. And I've been consistent with my data on that. And there's reasons why I think that's far more important. For example, right after the first of the year, the number of pending transactions goes way up while the available inventory is actually going down. So if you included those backup offer requests, it would imply that there's more inventory coming on the marketplace when the amount of inventory available for a buyer to actually purchase is decreasing. So you get wrong indicators. So that it's a discrepancy, a difference, not a discrepancy, a difference that I use. I think it's far more telling of the marketplace. And so we're sitting here somewhere around 70% of the 5-year normal. The 5-year normal is 2015 through 2019, which were 5 great years. Another look at the inventory is what's come on the market in the past week, and that's this gray line here. So you can see the gray line is slightly above 100%. We're getting about 105, maybe 110, 107% of the normal number of sellers. But basically, you have the normal number of sellers coming on the marketplace. The reason we have limited inventory is the red line. The red line is the number of new offers accepted. It's the demand. It's how many buyers are out there. And you can see right now we're 20%. All of last year, we were about at 15%. So you're selling 15% more homes than you normally do, and you're getting the normal number of homes coming on the marketplace. So what happens? Your inventory goes down, and that's exactly what you see on this blue line. All last year, it was basically on a downward course. This year, it's really hard to go much lower than 50, 60%, 70%. So at this point, it's just a matter of how aggressive buyers are going to get to be the successful buyer. And this is looking at the ratio between those two things. I call it days of unsold inventory. How long would it take to sell the existing inventory at the existing rate of sales? This is in raw count. So in 5 good years, you can see we were somewhere around 22 days of unsold inventory. Now we're down here somewhere around 14 days of unsold inventory. Much harder to get lower than 14. Frankly, last year when we were at 22, I was saying that it's pretty hard to get below 22. And the reason it's hard is most sellers want to keep their house on the marketplace for at least a weekend. So a lot of agents put the listings on the market on Wednesday, Thursday. They look at offers the following Wednesday, Thursday. Right there, you have 7, 8 days of inventory being forced on the marketplace. It wouldn't be there if the seller would take an offer. And that's why once you're at 14, it's hard to get below that because there are some sellers that want a 2-week marketing period. That puts you at 14 days. That's already over the average. So that's the reality of it. So you really will never see that number get down to 0. This is the pressure the buyers are seeing. Got a couple different things on here. There was 22 lines in between here, but the dotted line here, the red dotted line and the blue dotted line is actually monthly data versus weekly data. Then that's because I was not doing weekly data until COVID happened. Historically, I didn't have this data to go back and get on a weekly basis. But this is the worst month we've ever had in December of 2001. This was the best month we ever had, which was April 2018. And so basically the line would go up and down. As you go up this way, the market's getting stronger and stronger. What are we really seeing? We're seeing that since escrows that are closing now involved offers that were negotiated in 2022, selling above our best month we've ever had. And that just shows you how much imbalance there is, basically. So if you go back here, the solid line, probably the blue line, which looks like it's February of 12, and then you go back 5 weeks plus the week that the offer is getting processed. So go back 6 weeks and you're right at the first of the year. So this is where the bulk of the transactions were negotiated in 2022. And you can see they're close knit, they're back and forth, they're bouncing, but they're all at record high levels. deals. This is the same data set, just with less number of data points on there, so you can really see. Again, you can see that this one here is February 12. You got 4 solid lines, which are the most recently, and then you have 3 dashed lines that are the next most recent, and then 4 dotted lines that are the most recent after that. You can see that in 2021, the data was fairly consistent and, it was pretty aggressive. Basically, 45% of the sellers were getting 10% or more over their asking price. But now you get up into 2022 closings, and that same 45% of the sellers are getting 115% of their asking price. So they're getting an extra 5% over their asking price. This looks at some of the components. You have the active column, then you have what you learn from offers, and then closings. You have the different micro markets: Santa Clara County single family homes, San Mateo County single family homes, Santa Clara County condos and townhouses, and the Bay City condos and townhouses in San Mateo County. And I will admit that San Mateo County Bay City's data looks inconsistent, and it looks so inconsistent I don't trust my own data, but that's such a small market compared to the other 3 that it really doesn't matter. I will eventually make the time to go back there and look into it and try to explore it. The reason it doesn't make sense is it's saying that you have double the inventory, a little over 200%, double the inventory that you normally do, but yet you're selling everything out in 18 days. Those 2 things right there are inconsistent. Typically, if you had double the inventory, you wouldn't have almost 80% of the buyers overbidding at 105%. But where it does make, and also inconsistent with those numbers, but supporting the active inventory, is the appreciation is only 2.4%. And that's not just this year, that's going all the way back to 2020. So how I come up with my appreciation is I took every transaction that closed in 2020 and came up with a median price for that. And I used that all the way through 2021, and I'm using that going forward through 2022. At some point, I'll probably flip over and start comparing it to 2021 pricing. I haven't done that yet. And this way, it gives you an idea of what kind of appreciation you've had in the long term. And the long term is not even quite 2 years, because the median close of escrow was basically the first week in August. And I'm out of order, so let me go back to the active inventory. So what's happened with inventory? We have 60% of the inventory in Santa Clara County single family homes. It's the tightest marketplace out of the areas that I'm reporting on. It's gotten tighter from last week, where it was 63. San Mateo County single family homes got tighter, dropping from 91% of the inventory you'd expect to 81%. So significantly better than Santa Clara County, but still down quite a bit from any sort of norm. And again, I can't reiterate this enough. The 5 years that I'm using are the 5 years before the pandemic, and they happen to be 5 great years. If I pick 10 years or 20 years as my benchmark, these numbers would even be showing even less inventory. And then when you get down to Santa Clara County condos and townhouses, you basically have about the normal number of inventory on the market for buyers to pick from. The next column over is once you get offers, you can calculate days of unsold inventory. Days of unsold inventory is the single biggest indicator, in my opinion. It's the supply-demand ratio. In a free economy, supply-demand dictates future prices. So where are we standing? All the areas improved except for the Bay City's condos, which again is pretty small. But Santa Clara County single-family homes is the biggest micro-market area. It improved or got worse depending on your point of view, whether you're a buyer or seller, but it got faster from 17.4 days down to 15.4 days. And the San Mateo County single-family homes got faster from 16.2 days to 14.7 days. Santa Clara County condos got faster from 23 days to 19 and a half days. And bucking the trend is the San Mateo County townhouses going the other direction, but still real aggressive at 18 and a half days of unsold inventory. Now you flip over to the buyers. This is where you start really, seeing what the buyers that are out there are buying. Now you do have to remember this is data that was reported this past week, but then it's also because you're looking at closings, you're going back 5 weeks from there. So we're really going back 6 weeks. We're going back, fairly far in time, but it's the best you can do because we don't report sale prices until it closes. But in Santa Clara County, 91% of the buyers are paying more than the seller's asking price. In San Mateo County, it's 89%. Condos, not as aggressive, but still pretty strong at 85% and 78%. Everybody's buyers in all categories are feeling the pressure to bid up, so they're having difficulty finding a house. Now we look at a relative of that, which is how much are they overbidding? And again, these are record high numbers, 117.5% in Santa Clara County, 116.5% in San Mateo County for single family. Santa Clara condos are coming up a little bit at 110%. The Bay Cities condos, they're 105%. So that would tend to suggest that there's a shortage of inventory, even though I indicate there's a surplus. But it also could be an indication that buyers are coming out of the single family marketplace and are just used to the fast marketplace and are willing to make decisions quickly. And then finally, with closings, you get price, sort of a lagging indicator. You'd really want to know what's happening to prices today, but this is what's happened to prices since the entire calendar year 2020. That was my base. So in Santa Clara County, you're up 36%. San Mateo County, you're up 26%. Condos in Santa Clara County up 24%. And in San Mateo County, the Bay Cities are only up 2.4%. The green is my root URL. That will take you to YouTube. If you add 2022 for the current year, you get to these presentations live Saturday morning at 9 o'clock. If you add in the letter 8, 2022, 0312 for the month and date, you'll get the handout. So if you want to look at the PowerPoint presentation that you're seeing, you can actually get a hard copy of that. I try real hard to get that up about 15 minutes before 9. I got it up about 20 minutes early today. Sometimes it's closer to 9 o'clock, but I usually try to get it up there before the presentation. If you want to watch an old archive, you just do the root URL and that takes you to YouTube. If you want a specific episode, you put in the 8-digit year month code. Do I have any questions from anybody? Now what I'll do is I'll go into the details of what we did at a recap level. So moving on, now what we're looking at is the micro markets within each county. So basically for the first 3 columns, the redder the color, the hotter the marketplace is. So days of unsold inventory, here, the lower the number, the faster the marketplace is. So Cupertino Sunnyvale looks like it might be the fastest at 11.5 days. Basically what it's saying is everything in those 2 communities would sell out in 11.5 days. That includes the overpriced turkeys. That includes the real dogs that nobody wants. It's the entire marketplace. Everything would be gone in 11.5 days. The vast majority is going to disappear as soon as the seller will take an offer. And so now you can look up and down. You can see countywide you're at 15.5 days. The slowest area is the expensive areas in San Mateo County at 42 days. San Mateo County down here is 28 days. So you can see that San Mateo County is quite a bit slower than Santa Clara County. And I think has to be the reason is the expensive areas at 44 really pulls these up, because most of the county that people are in, like the base, anything on the base side of the summit is down around 16 days, very similar to Santa Clara County. You can see the coast is at 25 days. And I already talked about the expensive areas being at 42 days. The only reason I have RDC here instead of the entire county is I do not include outlying areas in San Mateo County like La Honda, Pascadera. There's so few of them, and when they do happen, they impact the data. So I feel it's better to eliminate that unless those are the areas you're looking at. And then there's so few properties, you can't do the statistical analysis that this relies on. Then you come down to condos. You can see the condo market really has heated up now. A lot of the areas like moderate low is at 10. So that's actually hotter than single family homes. This suggests that some buyers are getting desperate and trying to get into any kind of real estate for their priced out, because this would be sort of the lowest priced property. You can see if you come over on the right, and I'm jumping ahead, but the median price down there is only $900,000, and you can get condos as low as $600,000. To see that kind of speed in an affordable marketplace, at least to me, suggests that it might be a desire to get in before you can no longer get in. Moving over to the second column relies on sale price versus just pending transactions. So this is even older data. You can see all the numbers are in the high 90s, 98%. 96%. Countywide, you're at 91%, which is just unbelievable. I never thought I would see these kinds of numbers. The slowest area is at 77% of the sellers getting more than their asking price. San Mateo County isn't quite as hot. You can see it's more in the mid 80. Well, the countywide is 85 on the money, essentially. And then it goes down to the high 70s, 79%, 85.5%. So you can see it's still widespread overbidding. You come over to the magnitude of overbidding. The highest number I'm seeing right now, again, is Cupertino Sunnyvale. In Cupertino, you got 25% overbidding. That's the average overbid. The reason I do not report median, even though that may be statistically more valuable, there's going to be large periods of time when the median is at 100% and you won't be able to pick up any changes in the marketplace whatsoever. So with that, I went ahead and have been using average. You can see in San Mateo County, the average overbid is 117%. The average overbid in Santa Clara County is 117.5%. And you can see with the lowest overbid is 107% in the expensive areas. And that's almost ironic in itself too. You have 44 days of unsold inventory, which I would consider to be a balanced marketplace, but yet 71% of the sellers are getting more than they're asking, and they're getting 7% more. So it's not just a little bit, it's significantly more. Based on the days of unsold inventory, I would expect both of these numbers to be less. And so I think it's just the psyche of the overall marketplace, and potentially we're getting more into the model that I personally don't like and professionally don't like, which is where prices are going on the market artificially low to entice the overbidding. At some point that backfires because buyers are, a buyer at market value. If you price it closer to market value, that buyer won't be willing to pay 102, 103% over, which may be a higher price than paying 10% over an artificially low price. I'm only one person in the market speaking, and it doesn't make sense to have these kinds of amounts of overbidding when you have 44 days of unsold inventory. 44 days of unsold inventory is a balanced marketplace. I'd expect, good appreciation, 5-10% appreciation per year, but I wouldn't expect 3/4 of the seller to be getting 7% more than their asking price. And finally, we move over to the last column, which is the price. The middle number is the median price. That is what I assign the color to. You can see Redwood City and San Mateo Bay City are very similar in color and very similar in price. 2.53 million and 2.55 million, which is sort of surprising. Redwood City is typically less expensive than areas like Burlingame, San Mateo, San Carlos, but that just shows what's happening with high tech and a lot of the companies right there in Redwood City. Affordability, people can't do it. But to me, there's no difference between these, even on the low end. On the low end, yeah, you can afford 1.4 in Redwood City, where you can only afford 1.7 or not afford, but that 1.7 is the lowest end and the more moderate. But look at the high end. I mean, the high end in the Bay Cities is 3.6, and it's 3.6 in Redwood City and in the Bay City. So, the two numbers are so close together now, which is not what I would expect to see happening, but it is. And then you get down to condos at the bottom. Now we're looking at the makeup of the marketplace. We're looking at the number of new inventory coming on the marketplace. So the yellow line is the raw count and the blue line is the current count. So you can see the blue count has been consistently above this year. You can see last year in a couple weeks it was a little bit below, but most of the time it was following the expected level of inventory. So the big takeaway, in my opinion, on this slide is sellers are coming on at the normal rate. They're not fleeing Silicon Valley. They're not freaked out by the war. They're not freaked out by COVID. They're acting completely normal. It's the buyers that we'll see in a second that are acting with more desire, greater number of buyers or whatever that cause the huge demand. So now we're flipping from what's new on the level. That's how many new listings are coming into the marketplace. This is what's on the marketplace. So now it's reversed. You can see the normal inventory is up here at normally almost 1,500, and we're down here at about 1,000. So we're about 67%. I think the real number was about 70% of the inventory that you'd expect to have in raw count. And you can see last year at this time, we had right about the same number, and then we got lower and lower, ended up the year pretty low. And as I said, at some point, it's really hard to go much lower than this because the days on market and stuff are so low, you can't go negative. This is the supply side, the demand side. So now you got the same concept. The yellow line is the 5-year median and the blue line is the current. So now start looking at the vertical separation here and look how steep that's going up. It's going up steeper than the 5-year median. If anything, you'd expect it to be paused. Now, I will admit that what I'd really like to do is know how many offers are getting rejected because there was a higher offer. That unfortunately is a data point that is not available, because that's the first place where we would start seeing the trend change. The second place would be here, but so far the indication is there's more buyers coming out of the woodwork instead of less. So I don't know if it's just the number of the buyers that have lost out or getting more desperate, or if there's really more buyers coming onto the marketplace. Now we're looking at days of unsold inventory over time for the three major components. I also added next week on here just to keep myself honest, because I've been noticing some weeks this slide hasn't been updating. I'll get in the habit of doing that, so it'll jump out. And next week I'll leave it on the 19th, but after that I'll jump out to the next data slide just so that we make sure we have current data. But what it's telling you is days of unsold inventory. The red line is Santa Clara County single family homes. The brown line is San Mateo County single family homes, and the yellow line is condos and townhouses in Santa Clara County. So they're all fairly low. They're all basically at record low numbers. It's hard to say that they're significantly lower than last year, but we are a little bit lower. I forgot what the exact numbers were: 22%, 22 days last year, 17 days this year. And it's clearly not 22 for Santa Clara County, because your 20 is right here at the line. It might have been 24 or something for condos and townhouses and San Mateo County single family homes. It was probably like 18 for Santa Clara County, maybe 18 and a half. And now I think if I remember the number, it was 17.4 potentially. That's South County. I don't have the county-wide data. So now this is just the days of unsold inventory. It's thrown out there geographically for you, so you can see what the different areas are, where the hot spots are, and that kind of thing. You can see that South County is coming up pretty good. Palo Alto is sort of a lighter shade. The coast is a lighter shade, but all these are pretty red. And you have to get down to 7 to get saturated red. None of us are down in that area any longer. 11 is the lowest number I'm seeing right at the moment. I think we were at 7 a week or two back, if I remember correctly. Now we're looking at the frequency of overbidding. You can see up here at 90% were record highs. I mean, these were record highs last year, basically at 85%, and now we're 5% higher than that. Again, you can't go above 100. Theoretically, you can hit 100. A couple of the micro market areas, I think it was Cupertino, Sunnyvale, Foster City, and Redwood Shores, have hit 100 for a couple weeks, but you can't get above that. Overbidding here over time, look at the steepness of the climb here, and basically look at, if you come back down here to the 1st of January, boom, there was a little bit of a lag, but then all of a sudden these numbers just took right off. And there's a 5-week lag to get this data point, but I think the turning was the first of the year, and the reason it came up slower instead of a step function is the first couple transactions in 2000 and 2022 would be all cash closing in that week time frame. Those would start pulling up the overall average, and that's why it's a pretty rapid step up. I think it's sort of like prices, where it really does a step, and you have no idea how high that step is. Once you get all the data, you can see fairly rapidly the lines going up. You're now at something like 90.5% for Santa Clara County, something like 89.5% for San Mateo County, and about 85% for the condos in Santa Clara County. This is that same frequency of overbidding now. This is just showing it to you graphically. Again, you can see the lighter the shade of the pink, the less the overbidding. Here in the expensive areas, you got 71% of the sellers getting overbidding, but yet on days of unsold inventory, it's a white color because it's a balanced marketplace. This is the overbidding in magnitude over time, and this does fluctuate quite a bit. So I'm not worried that we were at 116% last week and we were at 115% this coming week that we don't have data for yet could easily be back up to 116, 117%, or it could be down to 114. You can see the sawtooth here, so it's not really a good indicator of what's going to happen. You can see the huge jump of about 3-4 weeks back, and then it went up again, and now it came back down. So, you're up dramatically from where you were at the first of the year, up dramatically from where you were last year. We were sort of stable at 108% for a good part of last year, and now you're at 115%. I mean, that's a dramatic increase in a very short period of time. This is the magnitude of overbidding. Again, notice the rapid turnups in Santa Clara County. It's noteworthy that you actually had a turn up back here basically at the beginning of October. It felt a little bit like 2018, where we had a whole second round of appreciation, and it wasn't being driven by sellers. It was being driven by the buyers, who I think are basically getting more astute and pulling some of the 2022 appreciation back into 2021. But look at the line here on San Mateo County. I mean, that's almost the step function showing up graphically that I was talking about, where you went from somewhere around 111%, maybe 110.5%, up to somewhere around 116% in just a matter of a few days. Because every day is plotted here. Even though we only meet weekly, I do plot out the 7 days that occur in between. This is the overbidding magnitude graphically. Again, the redder the color, the hotter the marketplaces. You can see some of these areas at 119%. We talked about Cupertino at 125%. Once you hit 117%, you're saturated red. So this graph is basically almost all red, because almost all the areas are at or above 117%. The only areas that aren't are the San Mateo County coast, the expensive areas in San Mateo County. I'll even let Los Altos, Palo Alto at 115% slide. Saratoga, Las Gatos, 113%. That's far enough down. That's 4% down. South County's down at 107. I let Los Altos, Palo Alto slide at 115. So I better let East San Jose slide at 115. But, you can see that everything, and you can actually see East San Jose here as being a little bit lighter than the San Mateo coast, or the Bay City coast up here. But it's amazing to see the consistency and the high magnitude of these overbid numbers. I mean, I would not have expected this kind of behavior. This is the median sale price that most people follow. You can see San Mateo County has been pretty flat and is still flat despite the overbidding, but Santa Clara County single family homes is going up here. Again, if you plot back, this is probably somewhere around February to 12th. It's hard to really tell on the scale. You subtract off the 5-6 weeks to get back, you're right at the first of the year. So these are the escrows, the prices that are being reflected as a result of rolling over and negotiating the offer in 2022 instead of 2021. This is your pricing here. The median colors is white, so you can see that this whole section of San Mateo County is basically the region's median price. From there, as you start getting pink, like in Foster City or Saratoga, Las Gatos or Mountain View, those areas are slightly more expensive. The deep red is way more expensive. The blues are less expensive. The colors assigned to them by the median price in the middle. The number to the right is the lowest 10 percentile. The number to the right is the highest 10 percentile. Here is just showing the current appreciation over that 2020 price that I have for the whole calendar year. I highlight the record high so you can start seeing the vast majority are record high prices since the middle of February. There's a couple exceptions here in South County and the expensive areas in San Mateo County. And South County isn't much of an exception and only down 4%. The expensive areas fluctuates a lot. There's not a lot of data points. They're high magnitudes. They're people that have made their money and a few dollars really doesn't matter to them. So back here on the 29th of January, they had 39% appreciation. Now they only have 21%. That's not people's property values going up and down. It's the quality, the size of the home, the size of the land that's being sold. A lot of things impact the median price, and you try to minimize that by doing micro market areas of similar priced homes. But when you only have a few data points, this fluctuation really doesn't talk about market trends. But when you start looking at the overall, look at how much yellow highlight there is on the left-hand side. It basically says that prices are on the upward trend. Here's looking forward a little bit. And the reason I say it's looking forward is I'm reporting March data, and you're going, how in the heck are you reporting March data when you're on the 12th? And you only normally get that on like the 5th of March. Let's see. So March is 31 days. So I collect it normally on the 5th going through the 4th of April, because I start on the 1st of the calendar month. So I start on March the 1st and I go for 35 days. So what I do for the 2020 is I stop last night at midnight, and I go back in time for 35 days. So this is actually closer to February data. So why is it useful? It's sort of forward looking. Inventory, will go up fairly significantly. Will we get to 700? Will we get to 600? I frankly doubt it strongly. But when you come down to days of unsold days of unsold inventory in the purple, or days on the market in the orange and burnt orange, those numbers are really not pressured one way or the other. So now what you can see is at 11 days for average, you sort of had the same market conditions as you did in April of 2020. At 7 days and 7 days, you're better than you were in April of 2018. Will we outperform 2020 when we get to April? Probably, but not dramatically. Days of unsold inventory, the market normally heats up a little bit. At 15, we're already a record low. So we're ahead of the game. So it's just a way of sort of predicting what's going to happen in the near future. 118% in the magnitude of overbidding, 91% in the frequency of overbidding. That is hotter than it was on April of any of these past years. This early in the month, it's hard to predict that far forward, but where it becomes interesting is like next week and the week after, before the March data is released, you start getting a better indication of where you stand. And this now is comparing apples and apples. And because we're so close to when I gathered this data on March the 8th, this is really what you should look at for historical comparison purposes. So you had 470 homes on the marketplace, record low inventory, which is what you'd expect. Average days on the market, 11 and 7 for the median. Those are record lows. Days of unsold inventory, 16 and a half. That's a record low. So when you compare the time of the year to the time of the year, which is very important in real estate, because there's a strong weekly cycle, there's a weak monthly cycle, and there's a very strong annual cycle. So you have to compare weeks and annual comparisons. On the 35 days number of closings, you can see that I think that's 999. We outperformed 2020 and 2019 and even 2018. And it looks like even 2017 and even 2016. So we outperformed a whole lot of years with a whole lot less inventory. Hopefully you have strong memories and can remember where everyone was talking about for years that the number of sales has been limited by the lack of inventory. Well, I challenge that concept because now with even less inventory, we sold more homes. It might have reduced it some, but it wasn't the limiting factor. So there's some factor that's limiting sales, and it's not the lack of supply. It's getting close. And the reason I'm willing to say it's getting close now is with your median days on the market at 7, that means some percentage of the marketplace, and it might even be 80%, because it's going to be more than 50, more than half the homes are selling within a week. And again, if the listing agent puts the home on the market on a Wednesday, looks at offers on a Wednesday, reports it on a Wednesday, that's actually 8 days on the marketplace. So it's not unreasonable. What's also interesting, and I think this number was actually 4 last week, this becomes real telling because it means on Friday, the 50% of the homes were on the market for 6 days or less. And I'm pretty sure last week it was down to 4. So this number's increased a little bit. It's still a record low. I mean, 9 was your previous, and to go from 9 to 6 may not sound like a big difference. If you say most agents put their house on market on Wednesday, and I look at the data on Friday, that gives you Thursday, Friday. There's 2 days right there without it. And I'd have to look whether that's 2 or 3 days, depending on how the computer calculates it. It's a significantly high number without even getting a weekend. Then if you go through the weekend, you're at 4 and 5 without even doing it. Now that number will go up higher. There's very little activity that's reported over the weekend. So this number on Saturday at midnight would be 7. On Sunday at midnight would be 8. But by being consistent, I'm getting the data, and I'm not even consistent. That's actually interesting because this isn't weekly data. This is monthly data. So this is 5-week data. So here, the day of the week I'm collecting the data, that does matter. And this wasn't Friday. That's why this number went up so much, because now we're on the 8th. So we're going back to Wednesday. So you've had a lot of the homes that are on the marketplace made it through the weekend and are going to be looking at offers later the first thing the next morning. So that's why that number went up so much. The more I look at my own data, the more I understand nuances. So let me try to explain this. On the data that we're looking at before we got to these last 2 tables, that's weekly data. That And that to me is the most important, because you're looking at a weekly cycle. You're looking at 5 weeks back to simulate a month. Now here, instead of looking at it on the same day of the week, I'm looking at it on the same date and going back 35 days. So March the 8th in 2022 was probably a Wednesday, where in 2021, and I don't know which way it goes, it was probably a Tuesday. And then in 2021, it was probably a Monday. So these numbers here, you're not comparing apples and apples. That does not impact, which I think is the stronger indicator, DUI, because DUI looks at just the rate of sales over the 35 days. So this is comparing apples and apples with none of that weekly cycle impact in there. Digression there. So now we get down to the amount of overbidding. Looks like we're just shy of 112%. And then you get down to that looks like 11.7%. Okay. That number's wrong. There's no way it's oh, you know what? The decimal's in the wrong place. I bet you it's 117%. I think that number sounds right. I have to manually put the decimal place in this because of the percentage sign. So I think that I'm pretty confident that number should be 117%. Also, part of the reason this data, it may sound funky or fluky, but for example, one property, I think it was in the San Mateo County condos, reported the sale price with 3 extra zeros. So they reported the sale price, and that impacted the sale price to list price ratio. The number was outrageous. I think it was like a 3,000%. And I'm like, you can't have that. And I had to go back and find the data. But I think this is me just putting the decimal point in the wrong place. So I'll go back and correct that. So these numbers are hand put in. They're calculated by the computer, but put in by hand. The frequency of overbidding is 91%. The sale price range is from 1.1 million to 3.7 million for Santa Clara County single family homes. And that's another distinction. This monthly data is single family homes in Santa Clara County only. And the median price is 1.82. And that's jumped up. Remember, we got up to I think the record last year was 1.407. Then I got down and spent a lot of time right around 1.650. And then it's jumped up basically in the last couple of weeks fairly significantly from about 1.640 probably to 1.820. It's jumped up basically $180,000 in just a matter of a few weeks. That's a 10% increase in just a couple of weeks. And with that, I'm back to the URLs, and I'm open for any questions that anybody might have. Not seeing anyone with a question, I'll call it a week and have a good one.